heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York, this is Bloomberg Technology. Coming up, Bitcoin blasts past $100,000. We dig into the positive sentiment, including the SEC chair announcement. Plus, it's TikTok for TikTok, as a social media giant anxiously awaits the legal decision on its upcoming US ban. And geopolitical risks across Europe and Asia abound, but US stocks stay near records. Can tech keep American exceptionalism alive? But first, let's check in on these markets, because that exceptionalism just takes a turn to the downside, off by 0.2% on the Nasdaq 100. But look, we are so close to the record highs that we saw across benchmarks yesterday. We have some nervousness ahead of the non-farm payrolls tomorrow as jobless claims come in today. And we still look at what's happening geopolitically speaking. Chips to the downside, Tesla to the upside as it gets basically a bit more optimism coming from Bank of America as they go to visit that gigafactory. Move in on some of the other asset classes of choice here on the Tech Show. Bitcoin. 100,000. We're currently at 101,000. We went past 103,000 earlier, up 3.6%. Why? A whole fledge of positive sentiment. Maybe it's a little bit to do with Fed Chair Jay Powell yesterday at Deal Book saying it's akin to gold. We've also got Putin saying that he wouldn't be in any way restraining crypto. But then you have the all-important Paul Atkins announcement. Let's go to that with Bloomberg's Mike Shepard now, because we do have someone from the Trump administration, future administration, SEC chair pick, Paul Atkins, and just give us his background. Why is he seen as crypto-friendly?
Well, he has emerged after years of being a well-known regulator here in Washington. He previously served on the SEC as a commissioner during the George W. Bush era, so he has the street cred as a regulator. But more recently, he has emerged as an advocate for digital currency and fintech. And so naturally, investors around the world were so encouraged to see Donald Trump select him as the incoming SEC chair. During the presidential campaign, Trump really advocated for changes in U.S. policy toward digital currency. He wants to make the U.S. a crypto hub. And one of the keys to that is making changes at the SEC, which under President Joe Biden has cracked down on this market after seeing some excesses that we saw during 2022 with fraudulent behavior that the current agency chair, Gary Gensler, singled out. But Trump has called for a change, and the crypto industry investors who supported his candidacy also wanted to see a change at the agency, hence their encouragement now.
And as you say, someone who has not only served on the SEC before as a commissioner, but someone who then gone on to advise fintech, in particular crypto companies. But just tell us a little bit more other than crypto. How else is he going to be facing the financial markets?
Well, I'm glad you brought that up, Caroline, because he is far from a one-trick pony. As I said, he is a seasoned regulator. One of the analysts that our colleagues spoke to yesterday after he was named referred to him as the godfather of conservative capital markets ideology. And that is a big statement, but he will be coming in there with an agenda to make broader changes at the agency, which oversees how markets report to investors and how companies report to investors and markets. And we will be looking possibly for changes in disclosure rules and also an easing up, perhaps, of some of the heavier fines that we've seen the SEC impose under Gary Gensler. That is something that Atkins has singled out in the past, and we can look to him to try to target that again in the future.
Mike Shepard, with all the context, we thank you. For more on the broader implications for the crypto market, Catherine Dowling's with us, Bitwise Asset Management General Counsel and Chief Compliance Officer. And Catherine, I mean, just first and foremost, more than $100,000. For people who've been in crypto for a long time, that must feel extremely vindicating.
It does, and thanks so much for having me this morning. It was fun to watch it go over 6 digits last evening and to see it continue to hold today.
When you think of the fun side on one, but also then the realities of what perhaps Paul Atkins could mean, dig in a little bit to the SEC announcement, what you made of it.
Yeah, absolutely. First off, leading up to this announcement, really all the names that were floated were positive. So we had that. We knew it was going to be better. So there was really no wrong answer. But in this choice, it's a great choice, quite simply. You have somebody who can hit the ground running. He has been a commissioner before. He knows how the commission works. And one really important factor that we're hearing about Paul Atkins is he gets along with people. All right, you can't underestimate how important that is. He needs to be able to work with the industry. He needs to be able to work with lawmakers. I've been at those hearings in Congress where it was antagonistic. Questions weren't being answered. Eyes were being rolled. And this was the environment in which crypto was trying to achieve regulatory clarity. And it just wasn't going to happen with that back and forth and the tension that was created in the Gensler era. So we are very much looking forward to a person who can come in, hit the ground running, work with the other commissioners, and hopefully also have a dialogue with the CFTC and with lawmakers. So in the new Congress, we can get some clarity, we can get some forward motion, stablecoin bill, market structure. So quite simply, this is an excellent choice, and he's another great add to the, you can't fault, regardless of your politics, you can't fault the economic team that is being put together by the transition team here.
Catherine, I want to just speak to the cynics out there. The people are now like, oh, great, crypto's got a pro-crypto SEC chair, or all hell's going to break loose. We're going to see yet more fraudulent behavior that they believe goes on in the space. I want to ask you, because specifically, yes, you're in the ecosystem, but you're someone who comes from a federal prosecutor background. You're someone who's worked for U.S. Attorney General offices in California. So speak to that concern here that we're suddenly going to see rip-roaring in crypto with no holds barred.
Right, absolutely. You're going to have that approach. You're going to have the folks who are going to say, oh, great, there's going to be no regulation. But if you actually look, the folks in the industry, we aren't asking for no regulation. We're asking for clarity, for regulation, for not just enforcement actions. And I know we've heard that quite a bit. What does that really mean if you break it down? The enforcement actions are expensive. They're limited to the case in point. You don't get a broader rule that will help businesses who either haven't engaged with the industry or trying to engage in the correct way. So having been at the U.S. Attorney's Office before and having worked very closely with the SEC, the light doesn't flip overnight. It's not suddenly that all the cases are going to disappear into the ether. It's just that you're going to have a better dialogue, you're going to get collaboration, and you're going to have a more positive approach to how we get there. It's not, we're not getting rid of everything. We're just going to get there in a more collaborative fashion. And that's what you need.
What's interesting is we are seeing actually some of the crypto-related companies just turning to the downside a little bit. A lot of run-up into this announcement, so perhaps a bit of profit-taking going on, Catherine. But spell out exactly what some of the... You talk about certain laws and regulations that need to be put in place. We hear about stablecoins being tackled first and foremost. Is that the number one line on the agenda from the SEC? Where do you think the first rules are going to come?
Yeah, I think, well, stablecoin legislation coming from Congress will probably be the first one out, just because it's a smaller, nichier piece. And there's been bipartisan support, so I think that's going to be the first mover. The market structure legislation I referred to will take a little longer, but it's more of a dialogue has to happen. That's the definition. That's who is going to be the regulator, depending on where these assets sit from a definitional standpoint along the spectrum. So that'll take a little longer, but we'll have some more forward motion on both of those fronts.
Is there any risk here? Could we see Paul Atkins not take the role, not be acknowledged for the role?
Well, there's always risk, but as I said, we're hopeful that that goes smoothly. I see no obstacles out there that should block it. However, as I mentioned earlier, there are a list of other folks, all of whom would be great choices. I'm really liking the Paul Atkins choice, given his involvement with the industry, his understanding, and quite frankly, as I said before, his demeanor and ability to collaborate and work with others, which is quite simply important in having a negotiated position with regard to some of this regulatory action.
Catherine Dowling, great to have you join Bitwise Asset Management. We appreciate it. Elsewhere on Capitol Hill, Elon Musk is in fact there today, stoking congressional enthusiasm, he hopes, for his pretty ambitious effort to slash at least $2 trillion from the federal budget. Now, Musk and his partner in the initiative, former Republican presidential candidate Vivek Ramaswamy, plan to meet with groups of lawmakers, followed by a session that all Republican House members have been invited to. Coming up, we'll discuss the impact of the French government turmoil on the country's businesses and startup sector. That's next. This is Bloomberg Technology. I think we're just going to hear from the National Rally leader, Marine Le Pen, now, who was speaking with Bloomberg earlier today. Just take a listen.
What I said was that the president's resignation is a personal decision for him and can only take place, in my view, when a political crisis happens or an institutional crisis can no longer have any other solution than the resignation of the president of the republic. What I do wish, on the other hand, because for sure there will be new legislative elections in the next few months, is that we work on a voting system by then that enables us to have a real majority, whatever that majority may be. But the country needs a majority. It can't live for months and years with 3 blocs, which in reality can't implement a policy.
That was Marine Le Pen of the National Rally, commenting on President Macron's position after, of course, he has been dismissing growing calls for his own resignations from politicians across the political spectrum. Macron came out saying he will serve out his second term in full. He's set to talk further at 8 p.m. local time. That's 2 p.m. here in New York. But let's just discuss the impact of all this political drama on French businesses, on tech companies. Bloomberg's Benoit Berthelot does that for us. And how is sentiment at the moment? Is there a moment of crisis among executive boards?
Yes, I mean, it's a moment of uncertainty. And as we know, business leaders don't like uncertainty. They like to be able to forecast their budget for next year, etc. Actually, that uncertainty started this summer in June when Macron called the unexpected snap election. So that's ongoing, basically. Barnier, the Prime Minister, was preparing a budget for next year that was actually going to slash some helps for innovative startups on R&D, etc. So now there is uncertainty if it's going to happen. There is a few weeks left for Macron first to pick a new Prime Minister, right, and then to vote, if possible, the budget. So yeah, like startup leaders and companies in general are waiting to see what's going to be in that budget, or if we are going to continue with this year's budget, which could be reconducted through next year through a special law.
Benoit, it's notable that leaders like Eric Schmidt, of course, former Google CEO and now focused on geopolitics in particular, has come on this show and said France is the standout in Europe in terms of getting things done, having a really healthy ecosystem where companies like Mistral for AI can thrive. Has that been something being questioned of late?
It's not been questioned, but you're right. Like Macron started about 7 years ago, when he was first elected, a sort of push for what he called a startup nation. He helped companies to hire foreign scientists, for foreign companies to come to France to start their business. He's been doing some helps to get visas for foreign tech workers, for example, and then the push in AI, led by OpenAI, led to new French startups trying to rival with OpenAI, like Mistral, as you said. Macron is also going to be organizing a world summit in February on AI. There certainly is this push that companies hope can continue, and obviously the political situation is not the best, just to ensure that this momentum, which is quite fragile, can keep going.
Benoit, it's great to have you, Benoit Berthelot, on the impact in France at the moment. Sticking with international politics, South Korea's main opposition leader says it may be difficult to get enough support from the ruling party to impeach President Yoon Suk-yeol this week after his declaration of martial law. But he remains committed to removing the president. Democratic Party leader Lee Jae-myung sat down for an interview with Bloomberg earlier today. Here's what he had to say.
정치는 결국 궁극적으로 국민이 하게 되는데
Ultimately, politics is done by the people, and even if the result of the vote may go against the will of the people in the current situation, The vote result may change next time if individual members of the parliament are pressured heavily by public opinion. That's what I think.
Important for companies such as Samsung, SK Hynix, of course, tech more broadly. Let's discuss the impact of all this geopolitical uncertainty on tech markets more broadly. Jay Jacobs, US head of Thematic, active ETFs, and BlackRock. And thus far, Jay, it hasn't had much impact. US stocks have continued to show their exceptionalism. We've had record highs yesterday amid global turmoil. What do you make of that?
Well, actually, the tech sector in the United States is one of the most geopolitically exposed sectors out there. About 60% of the revenue of tech comes from overseas. So one of the ways that we've been looking about geopolitical fragmentation is, can you really tilt your exposures within the tech sector to companies that buy in the United States, build in the U.S., sell in the United States, really to try to isolate some of that geopolitical risk that I think is very present in the tech sector in particular.
Where would that end up leading you? Which companies? I mean, first and foremost, you might think, well, those that have been benefiting from the CHIPS Act, who've been building here in the United States, but then Intel hasn't exactly been having the best of times of it.
Well, it's coming from a range of companies just kind of across different industries within technology. I mean, I think if we look at artificial intelligence, we see that a lot of the leadership is with US-based companies. For example, you could look specifically at data centers and power companies as being really important parts of the AI ecosystem, but are very localized to the United States. You're getting some of that isolation from geopolitics. We even brought out an entire fund based off of this strategy, IETC, which is really looking at the tech sector, but tilting towards those U.S. kind of very domestic-focused companies to isolate geopolitical risk.
That's really interesting. The infrastructure build-out is one that many have turned to, other than just thinking, OK, NVIDIA, chips and shovels. We then think about the next layer down, the energy, the companies. But how many people are asking you, well, what about application layers? What about the next frontier of AI?
That's really where a lot of the conversations are going. I think, if we look at the last 2 years, it's been a huge focus on the Magnificent Seven, and it's been a really concentrated rally within artificial intelligence. We think as we enter the third year of what we're really calling the build phase of artificial intelligence, this is when the markets are going to recognize that this is something much bigger that's going to impact a wider range of technology stocks, a wider range of semiconductor stocks, the power stocks. It could even impact cybersecurity stocks as data gets more valuable and needs to be protected. And you could even look at adjacent industries in financial services and healthcare where AI can really create more productivity and efficiency. So I think we're going to see a transition in 2025 to really a broadening of that artificial intelligence story.
How much of the story is starting to pick up back in crypto for you as well, Jay?
Well, it's significant. Of course, Bitcoin passing 100,000 is a significant milestone. But really, you have to take a step back and look at the broader picture of why is this happening. I think there's certainly some anticipation of more friendly regulatory tailwinds. But also in your previous segment, you were just highlighting some of the geopolitical risk around the world, in Europe, in Asia, and in a lot of ways, professional managers, which are really just starting to access digital assets for the first time with our launch of IBIT, our Bitcoin ETP. Are thinking about it as a hedge in their portfolio. This thing behaves very differently from stocks and bonds. And if you see more geopolitical risk, Bitcoin could really benefit.
What's interesting about your role is not only are you thinking about strategy, thought leadership, clients, but you're also thinking about the international ETF offering as well. And I'm just interested about whether anyone is betting on outside of the US.
They are, but in more targeted ways, where we've seen some really significant flows in the past years, specifically looking at India as really a play on changing supply chains, particularly if you look at a lot of the reshoring that's happening in the United States. There's been an effort to build more here domestically, but also to diversify supply chains geographically. And India has been a major beneficiary. Just like we have a CHIPS Act in the United States, they've been focused on building out more chip capacity as well as building out more tech manufacturing. So India has been a big beneficiary, Mexico as well, as you look at nearshoring and the interplay of growing trade relations between the U.S. and Mexico.
Fascinating. Jay Jacobs, thanks so much for that. U.S. head of Thematic and active ETFs over at BlackRock. Meanwhile, coming up, we're going to be hearing from AMD CEO Lisa Su on her plan to keep on taking on NVIDIA. That's next. This is Bloomberg Technology. AMD CEO Lisa Su spent the better part of her 10-year career engineering one of the biggest turnarounds in Silicon Valley history. Now, she's preparing for a battle against NVIDIA. Emily Chang sat down with the CEO at AMD's headquarters in Austin, Texas, to discuss the bets she's making to compete, a long view on the global chip supply chain, and even her distant family link with NVIDIA CEO Jensen Huang. Take a listen.
NVIDIA is seen as the dominant force in AI right now, and AMD is widely considered the next best option. Is that good enough for you? Do you like being seen as the underdog?
I wouldn't call it a like or dislike. What I would say is, AMD has had a history of doing amazing things. And from that standpoint, we've always been in this place where we haven't necessarily had the same amount of people that other larger companies have, but we've certainly punched well above our weight in terms of technology capability, in terms of impact on the industry.
This is the most complex, highest performance computer.
People are kind of obsessed with the fact that you and Jensen are distant cousins. I know that you are competitors, but do you ever trade notes?
Well, first of all, Jensen is brilliant, so I fully admire him for that. We were really distant, so we didn't grow up together. We actually met at an industry event, so it wasn't until we were well into our careers.
So no family dinners, just to put the rumor to rest.
No family dinners. And it's an interesting coincidence.
So many of your customers are building their own chips. Hyperscalers like Apple and Meta and Google and Microsoft and Amazon. Is that a threat?
This is a huge market, Emily. There's more than enough chips for everybody to build. And the beauty of this is everyone's recognized that chips are so important. Yes, so it's natural that they're going to have their own capability.
Has the shakeup of a very established industry surprised even you?
It has a little bit, I have to say.
AMD CEO Lisa Su there alongside Bloomberg's Emily Chang. Check out the full episode of The Circuit tonight on Bloomberg TV, 10 p.m. Eastern, or stream on Bloomberg Originals, 8 p.m. Eastern. Now, it's time for Talking Tech. First up, all chips. TSMC is in talks with NVIDIA to produce Blackwell AI chips at TSMC's new plant in Arizona, according to Reuters. Now, TSMC is said to be making preparations to start production early next year. Plus, Apple's major manufacturing partner, Foxconn, reported a second consecutive month of just single-digit sales growth, raising concerns that demand for AI infrastructure won't be able to offset weak iPhone sales. Apple's historically accounted for about 50% of Hon Hai's overall sales. And the EU's new competition chief says a potential split of Google's businesses is still under consideration. Teresa Ribera, who started her 5-year term this week, said she aims to build on the legacy of her predecessor, Margaret Vestager. Coming up, we're going to be discussing why hedge funds are making MicroStrategy into Wall Street's hottest trade right now. This is Bloomberg Technology. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. A quick check on these markets because, while we're teetering around record highs, the Nasdaq is only off by 11 points. The Nasdaq 100, that is, the big benchmark for big tech. We are being put to the upside by the likes of Tesla, for example. Chip stocks on the downside, though. We're looking at Bitcoin is the real benchmark that we're all looking at the moment. It's now got an ecosystem worth $2 trillion. I mean, actually smaller than some of the biggest tech companies, but still, we have run up past $100,000, up another 3.5% today. Move on and have a look at some of the individual movers within that Nasdaq 100 and some of the benchmarks. Now, the biggest points dragged to the downside is Synopsys. Integral to chip design, to chip manufacturing, basically to testing your designs, and numbers came in a little bit weak. So we have seen a drag down for the electronic design automation software company today. First quarter forecast was weaker than expected. Intel off by 3.4%, maybe some of that moon music around chips pulling it lower. There has been some interesting news in terms of its board trying to shore it up, and the Microchip CEO comes on. So does a former ASML chief executive too. So two key experienced operators coming onto the Intel board as they seek a new CEO. MicroStrategy actually just turning to the downside, off by 1.7%, having been rising earlier. But we are going to dig deep on all things MicroStrategy after what has been a phenomenal run-up in the stock. Why? Because it's basically a Bitcoin proxy. We can talk about that with Bloomberg's Yijin Chen. And Yijin, I mean, MicroStrategy has been beloved of the retail community, but actually some institutional players have been getting in on Michael Saylor's Bitcoin base.
Yeah, exactly. So I just published a story today about how MicroStrategy has become the hottest trade right now with Wall Street. And if you look, hedge fund managers, they are buying the convertible bonds that the other instrument, because MicroStrategy has this plan about keep raising capital, right, to fund its Bitcoin buying. And so they have already raised 6 billion convertible bonds. And for hedge funds, this is a perfect instrument for them to play a market neutral arbitrage bet. And this is a complex bet, but the essential part of it is to bet on the volatility. So they are riding on the volatility of the underlying of MicroStrategy. As we see today, there's a big jump, right? Like at the open, MicroStrategy was up like almost 9% when Bitcoin hit its new record. So MicroStrategy moved on that, lots of price wins, and that just make the convertible arbitrage trade much more appealing to this hedge fund group.
We were talking about how the retail frenzy has been there, and actually a lot of people playing leveraged bets on MicroStrategy, getting into 2x, 3x, the ETF exposure. That actually proved quite a difficulty from a liquidity perspective in the market. Is there any talk about worries of this volatility or playing this volatility when you're looking at institutional and retail?
Sure, yeah. I would say MicroStrategy is just no short of volatility, right? Because it's a Bitcoin proxy, so the volatility rides on the Bitcoin pricing, but also the premium of its Bitcoin holding, because it's now trading at 200% more than it's like the value of Bitcoin it holds, and those things could also move around. And then you have the retail that's buying the ETF, leverage ETF 2 times, right, long 2 times short. That's that, and then the institution. And I think in a way that the company even itself told that it's more volatile than any S&P 500 stock. So that's where the money flow coming from, and people are just riding on the volatility and the retail frenzy.
According to Bloomberg, 14% of outstanding shares are currently shorted, but thus far that's been a painful trade. Thank you so much. All things MicroStrategy with Yixin Shen there. Another story we're tracking. Chinese hackers compromised 8 American telecom companies as part of a wide-ranging espionage effort to gather intelligence on prominent US citizens. That's according to Biden administration officials. Here for the details, Bloomberg's Kelsey Griffiths. And kind of absolutely shocking, really, that 8 have been compromised and we can't seem to get them out.
That's exactly right, Caroline. What we do know, and the details are pretty scarce on the ground right now, is that multiple U.S. telecoms have been breached in this seemingly very wide and broad campaign to burrow into our telecommunication networks and glean really important and valuable details about public officials and about life in the U.S.
We also know, I believe there's worries about both incoming president and vice president in terms of being compromised on their communications. Just talk to us about what the CEOs have been saying. We understand that AT&T CEO has been speaking with other lawmakers. Who has come out and sort of talked about this publicly, though?
That's right. There haven't been a lot of companies that have so far come out publicly and talked about this. T-Mobile last week became the first carrier to publicly share details about what they had seen on their networks and sort of some of the markers of that threat. And they spoke with me about that exclusively. They also put out a blog post last week that detailed some of those threats. So I think that, what we're seeing is a really sophisticated attempt, and T-Mobile caught it early, but some of the other carriers, it seems, weren't so lucky.
Kelsey, fascinating reporting, and I think Senator Marco Rubio, who's eventually, of course, meant to be Secretary of State, talking about how this is as bad as it gets. Kelsey Griffiths on all things hacking. Coming up, does the unicorn status need to be reevaluated? We'll be discussing that with Rebecca Lynn, co-founder and general partners of Canvas Ventures. That's next. This is Bloomberg Technology. In the last year, more than 1,400 startups were valued at more than $1 billion. but actually only 15% claim profitability. That's how our next guest is measuring, well, the fact that these numbers don't seem to be a measure of real success anymore. Unicorn status, how do we reevaluate it? And what are the new markers for that success? Rebecca Lynn, I'm pleased to say, co-founder and general partner of Canvas Ventures. We steal all your great statistics, Rebecca, but the statistics are shocking. And I'm interested as to what you think the new benchmark is and how many of those 1,400 actually still vindicate a $1 billion valuation.
Yeah, I think the number I've heard is it would take about 20 years for all of those unicorns to actually make it to the public market, and only 15% are profitable. And on top of that, a lot of them have been around, for over 12 years. So just way too long to really hit their stride and hit profitability. I think with Gen AI now, a lot of the metrics we'd seen in the past aren't really the metrics, we're looking for in the future for success. Unicorn status, I think people have said that we need a new beast. I think that's absolutely true. And they're, getting to that $1 billion valuation is not really not meaningful anymore. And then on top of that, what we're seeing with Gen AI is an incredible opportunity to generate revenue quickly. We're seeing this in the statistics about how quickly companies can get to $1 million of revenue. It used to take companies quite a lot longer. Right now with Gen AI, the median is like 11 months, right? And we actually saw a company the other day that got to $1 million of ARR in 2 weeks.
But is that sustainable, Rebecca? Like, is that something?
It's not.
No.
No, I don't think so. I think what's happened, I don't think it's sustainable. And so what we really are looking for are companies that have sort of a unique insight and very deep industry knowledge in the area that they're going into. We think that's more important than it ever was before. And I think this, the ARR ramp we're seeing, which so many VCs were hanging their hats on for so long, is really ephemeral. And so, what's happening is, these big enterprise companies and consumers too are signing up and they're paying money to really, really pilot, the technology. And at the same time, we're seeing massive, enterprise companies like Salesforce, hire 1,400 new salespeople to capture that opportunity.
How many agents, Rebecca, on that note of Salesforce, how many agent AI companies are you being hit with at the moment?
Oh my gosh, dozens a day. And I think those are features. Those are features of, large enterprise companies in the future.
They're features. So what is the reality? What companies do you want to see being built? What problems are you wanting to see being solved that is unique right now?
I love that question. Thank you. It's so exciting right now to be in venture. There are so many theses out there that we have wanted to invest in for a very long time. And there are companies that tried to do it, but the technology just wasn't there yet. I mean, a prime example, was of a company that was impacted by Gen AI was Casetext. Casetext was doing really well. They had 10,000, customers, but they couldn't fulfill the last part of their promise, which was really to truly stand in the shoes of a legal counsel. And when Gen AI came along, they could do that. And that was a huge unlock and why they were purchased very quickly by Thomson Reuters. Another one that we've wanted to see for a very long time is voice. And I think that is the most exciting thing about Gen AI right now. And so when we were in Doximity for many years, I just thought, we should be taking the entire patient call volume, both inbound and outbound, off the shoulders of the physician's office. That should just happen. And the tech just wasn't there yet. We've been looking for this tech ever since, we led Siri many moons ago, right? Yeah. And with Gen AI, it suddenly is there. So we invested in a company pretty recently called Parakeet with a founder with super deep technical knowledge on the medical space. And they're doing just that. They're taking the call volume, the inbound and outbound call volume off the shoulders of a doctor's practice. And that to me is really, really exciting.
We listen to you because of the amount of times you're on a Midas list, the amount of times you're called one of the top VCs, but also because of the exits that you have seen. And you call out Casetext, which is M&A. We've also seen, as you just mentioned, Luminar, for example, which actually managed to do the public kind of route. How are you anticipating some of your portfolio going public come 2025?
Yeah, I mean, I think the window is starting to open. There are so many companies that are ready. I think the market's ready. I think with the new administration, people are ready for the unlock. And I do think we'll see the public market start to open up. Maybe I'm too optimistic. I don't know, but I do think that that's a very viable option for people going forward. The other thing is, I think M&A. I mean, I actually prefer M&A every single time because it's just a much more linear exit for founders often. And so I think founders should always keep both options in mind. My most successful companies have had a very exciting IPO path, but have also dual tracked with an M&A path at the same time.
Rebecca, Lynn, we thank you for pushing ahead to next year, co-founder and general partner of Canvas Ventures. We hope to see you in that new year. Meanwhile, let's talk about a company that's part of one of the most valuable startups out there, ByteDance's TikTok. It's tripled its US shopping sales to over $100 million. The social media platform says its app drew in a 165% annual increase in shoppers for the 2 days between Black Friday and Cyber Monday. This comes as the app faces, of course, potential shutdown in January, as regulators fear its parent company ByteDance poses a national security threat. Let's dig into that TikTok on TikTok. Alexandra Levine is with us. It could come tomorrow. I mean, we've been sat here all week thinking that we'll get a ruling on whether or not the case can continue that US would ban TikTok come January 19th.
Yeah, it is finally here. We are expecting a decision probably out of Washington tomorrow morning. And it's a really consequential moment. It feels like it's been a very long time, but this is actually a hugely consequential moment. Probably the biggest deal for TikTok since Biden actually signed the divestiture ban law back in April. And part of the reason this is such a huge deal is because if this comes to pass, this will be the first time that a foreign-owned social media app has ever been banned in this country. And by the way, it's not just a social media app. It is a social media app used by half of the American population. And there are more people on TikTok in America than voted in our last election.
And the future administration, the head of it, is on TikTok. Many of us are on TikTok, and I feel like the anxiety around whether it is going to be banned has just dampened away as time's gone on. But I mean, are we feeling that the US court is going to let this continue, or could they take it off the table?
You know, no one knows for certain. I think reading the tea leaves, it seems likely that the court is going to uphold this law that would potentially see TikTok shut down next month. But that doesn't mean that that's sort of the end of the line for TikTok. I think that it's probably not going to disappear off of our phones in January. In all likelihood, if TikTok loses tomorrow, they are probably going to somehow appeal the decision, either asking the DC Circuit to take it up and hear it again, or potentially taking it to the Supreme Court.
How has TikTok been just countering this, lobbying behind the scenes? Because we haven't heard much publicly.
Well, I think a huge piece of this is actually American investors, and it's also a hugely overlooked piece. I think that American investors have so much money tied up with ByteDance, which is TikTok's parent company. They have collectively billions, and so it's not just a decision tomorrow that will affect millions of people. It's also a decision that will affect billions of dollars. And I think one really big question I've had about what's been going on behind the scenes is how will Trump's ties to some of these investors? We know that there's at least one big Republican mega donor, Jeff Yass, who Trump is, has a good relationship with. Big question is, how are these American investors behind the scenes potentially going to affect the outcome for the app's future here?
Sequoia, General Atlantic, Susquehanna, International, you name a lot of them in a great piece today. Go and check out the Tech Daily with Alexandra Levine, and stay tuned for that decision. Coming up, Anduril gets an AI boost partnering with OpenAI. More on that next. Meanwhile, let's just check in on Etsy because they've announced their new CFO, who is going to be joining. Of course, executive changes coming from a CMO perspective, but Lanny Baker is going to be joining as Chief Financial Officer, coming from Eventbrite, as Rachel Glazer leaves. This is Bloomberg Technology. OpenAI is partnering with defense tech company Anduril on anti-drone systems. Bloomberg's Shireen Kafari has the inside track. And Shireen, this is more of a push we're seeing from OpenAI to be something that serves U.S. defense, the government particularly.
That's right. So the company has said that they want to prioritize supporting the U.S. government and its Democratic allies in adopting AI. And a big part of that is increasing their defense partnerships. So they have also done a partnership with the U.S. Air Force Research Lab. They are working with Los Alamos, and they've hired a former top Pentagon official to head up their policy in that area, and also added the former head of the NSA to their board recently. So we're seeing a lot of movement in that direction.
How do employees feel about it? Because it can sometimes be controversial, this kind of work.
Yeah, absolutely. Historically in the past, for example, in 2018, when Google was starting to partner with the Pentagon in what was called Project Maven, it was hugely controversial. Employees protested. The partnership ended up not working out at that time. However, now we're seeing, I would say, less resistance from employees generally. Of course, that could change. But so far, we haven't seen much pushback. And it's not just OpenAI. OpenAI's competitor Anthropic recently did a big partnership with Palantir and Amazon. And Meta has also been doing some work in this area. So I think this is a trend we're continuing to see grow.
And very briefly, look, Sam Altman was at the DealBook event yesterday talking about his optimism that Elon Musk isn't going to be too vindictive when close to Donald Trump. Do you think that this could be in any way an issue?
I think it's really too soon to say what is going to happen in terms of AI policy and exactly how or if Elon will be involved. We know, of course, he's leading Doge, but so far there's still a lot that's being decided about who and how AI policy is going to shake out. So I would say it's too soon to say.
Shireen Ghaffari, brilliant to have you. Thank you. Meanwhile, President-elect Trump, as we were just talking about, has now nominated fintech billionaire and SpaceX astronaut Jared Isaacman to lead NASA. For more, Bloomberg's Lauren Grush joins us. And look, he has been busy going up and doing spacewalks with SpaceX, and now he's going to be leaving his CEO role.
Yes, absolutely. I mean, if there's one thing that most people can say about Jared is he's very passionate about space. He really kind of burst onto the scene in 2021 when he announced that he had booked the first all-civilian astronaut crew trip to space on SpaceX. And ever since then, he's only become more and more of a central figure at SpaceX. So it's certainly a very interesting pick. And I think it's going to open up a lot of questions about, you know, his relationship with SpaceX. I mean, you have to understand NASA and SpaceX are very big partners, and SpaceX is maybe the biggest contractor that NASA has right now. So it's definitely a very unique pick for the agency that I don't think we've seen really before.
Yeah, so replacing Bill Nelson, are there ways in which they have protections in place to not have these blurred lines as to someone who ultimately doesn't work for SpaceX but has plowed an awful lot of his personal fortune into rides using SpaceX, and I'm sure has a personal relationship across the board?
Absolutely. I do believe there are some areas where he might have to recuse himself. For instance, if he has an investment in SpaceX where he holds shares, it's possible he might have to divest those. If there are major decisions that are being made about future contracting, you know, it's possible he might have to recuse himself from making those decisions. A lot of the times NASA administrators don't get into those nitty-gritty details. But again, it's a lot of open questions I think a lot of people will be asking, because anytime NASA makes a decision on a major NASA contract, you know, those can get quite contentious. We saw that when they put out bids for their human landing system. SpaceX won that, but Blue Origin ended up suing NASA and the federal government over that decision. So those decisions can get quite contentious, and I think his selection will only add fuel to those fires.
And there's pictures of Jared Isaacman doing that spacewalk a few months ago. Interesting that Starlink, of course, is a customer of Shift4 Payments, so plenty of interlinking going on. We thank you bringing us the latest. Bloomberg's Lauren Grush on the latest from Trump administration picks. That does it for this edition of Bloomberg Technology. You don't want to forget to check out the podcast. You can find it on the terminal, as well as on Apple, on Spotify, and on iHeart. From New York, with stocks near record highs, this is Bloomberg Technology.